Hello traders, this is Blake Morrow and you're listening to the week ahead video for June 30th, 2019 and welcome to the G20 Summit recap. I'm just kidding, it's really not the G20 Summit recap, but we will cover that here in just a couple minutes. But before I do so, let's talk about ForexAnalytix. If you haven't tried it, it's only $1 for 10 days. Try it out. $1 for 10 days. All you got to click this little button right here where it says sign up today, and I'm already subscribed, obviously. But once you get signed in, make sure you download the mobile app. You can download it on your tablets or your mobile application. So this way, if you're not in front of your desktop, where you normally trade, at least you can get our updates when support and resistance levels are breached. When there's news coming out, you want to jump into our chat rooms. You can do that as well, and it's a great place for traders. So try it out. $1, 10 days. Give it a whirl. Okay, let's talk about. Yeah, it's enough of that. Let's talk about the G20. First of all, the G20 summit. The U.S. and China have officially announced a truce. China's going to buy some more agricultural products. We're going to hold off on our additional tariffs. This is pretty much as expected. So, chances are we're going to see a rally in risk, and maybe even a little bit of a pullback in gold. I'm not too sure how the dollar is going to respond. Should be a little weaker, but here's the thing. Since the everything that had expected really has come to fruition regarding the G20, what I would be looking for is any type of gaps that you see in the market. If there are major gaps, which I'm really not expecting too big of gaps, but if you see them in the market, they're probably going to correct. So if for example, if you're looking at gold, and this is just a chart of gold where we closed actually on Friday, you can see we have this pennant formation. If we gap down like at 1400, I would expect dips to be bought. If you're talking about the S&P futures, S&P gaps up above all-time highs, I would think that the gap is going to be faded. So is the S&P going to gap up at 70 points? I doubt that. I mean, that would be a huge gap higher in the market, but we might gap towards these all-time highs. I would just expect these gaps to be pretty much filled, because this is not unexpected. What happened over the weekend was not unexpected. You already got some short covering going into the weekend, especially in the if you look at the S&Ps. You got some short covering going into the weekend. We got the positive outcome everybody's expected. Yeah, we might gap up a little bit. Maybe we gap up 20, 30 points in the S&P. We're probably going to end up moderating that, going into the Monday open. So anyway, the reason why I point this out is because whatever trends that we saw, predominant trends in the market, especially in FX and in like precious metals, I expect those to continue. So if you get a gap counter trend, I would think that that's going to be a development that allows us to pick up some of these precious metals, perhaps on the on the cheap. So if you look at gold, for example, all right, let's not ignore the fact that we've had this multi-year consolidation breakout. Multi-year. You're talking 6 years of consolidation in gold. If gold gaps down 10, 15 points, I'm going to tell you guys personally, I'm using that as an opportunity to buy gold. All right, that's what I'm going to personally do. We have this nice consolidation. We closed above 1400. Any dip, down towards a 1390, 1380, 1375 specifically, those levels are probably going to be bought, and I'll be down there, because I think from a risk reward perspective, that's a great place to be. If you look at the euro dollar, again, we have a pennant formation. We're above the 200-day moving average. Any dip towards 113.50, 113.30 is going to offer an opportunity to be on the long side once again. All right, those are things that I'm looking to do going into this week. Now let's talk about this week, because and this isn't going to be a super long video, just to let you guys know. This week is a short US holiday week. So first and foremost, if you are a ForexAnalytix subscriber, okay, you use ForexAnalytix, you're in the chat rooms, you're in our private chat, you get all of our updates. This week you're going to get limited updates from Wednesday on, Wednesday, Thursday, Friday, because I believe, if I'm not mistaken, Wednesday's a half day in the equity markets. Equity markets will be closed on Thursday, and then they'll be open probably for a half day on Friday. And even if it's a full day on Friday, there's not going to be anybody around, because most traders here in North America are on holiday. So it's our Independence Day holiday, 4th of July. Most of us will be away from our desks. So expect very limited and low volatility at the end of the week. And again, if you are a ForexAnalytix subscriber, I'm just giving you some warning right now. Updates will be very limited throughout the end of this week. All right. Now, that doesn't mean Monday, Tuesday, we're not going to get some movements, and it doesn't mean that we're not going to get data, because we are. So let's talk about that. So today, since it is Sunday, actually we have Chinese manufacturing, private sector manufacturing PMIs coming out. So we might get a little activity tonight out of China. Monday night in the US, or Tuesday morning out of Australia, we have the RBA rate decision, and the RBA is expected to cut rates. Now, with that being said, don't expect I know you've probably looked at the Aussie, and the Aussie's had this really significant rally. We posted a new trend low. We've reversed almost back up to, well, we are back at 70 cents and above 70 cents, and we closed at 70.25, which is a big resistance for the Aussie. I mean, you think about like the possible of a double bottom or false breakdown squeeze. This could take us to 71, 72 cents. With gold breaking out, and the Aussie dollar so firm, and the market already expecting the RBA to cut rates and the RBA to be dovish, the risk is the RBA is dovish, but maybe not as dovish as the market expects, and we get a continued rally in the Aussie that mirrors that of gold. So what I'm trying to say here is, just because the RBA is going to cut rates more than likely on Tuesday morning in Australia, Monday night in North America, just because they're expected to cut rates, doesn't mean that the Aussie will go down. All right. So just remember, if the Aussie is right here at 70 and a quarter, the 200-day moving average is not very far away at 71 cents, and a break above 71 cents in the Aussie dollar could be quite bullish for the Aussie. Okay. And it's also, keep in mind that China and the US, at least near term, are going to stand down. That is also a tailwind for the Aussie dollar. So be very careful being on the short side of the Aussie this week. On Wednesday, I guess I should also mention just really quick that at the same time, trade balance numbers and trade balance numbers and building approvals will be released in Australia Tuesday night, or Tuesday night here in the US, Wednesday morning. And then also Wednesday morning, before all the traders head out for the 4th of July weekend, we do have ISM services data on Wednesday. Okay, so on Wednesday we have ISM, we have Canadian trade balance, and then we have ADP non-farm on Wednesday. Now, it is 4th of July weekend, so there are not going to be traders around on the 4th of July, which is Thursday. But Friday, just because it's going to be a half day or very limited trading activity, doesn't mean that we don't have data. Matter of fact, we've got the biggest data of the month. We have the jobs report on Friday. And the market's expecting us to bounce back and create 150, 160,000 jobs after creating a meager 75,000 jobs on the previous month. So if you look at the dollar index, the dollar index has been beaten down. We've had this double top. You can see the double top. We had ascending wedge. We broke lower. 75.50 has been a long time target. Actually, let me show you, my drawings here with the dollar index. Let's go, just because I can draw on the chart. Okay, we have this double top right here. You can see this, double bottom, 161% extension of this move right here. Comes in at 95.50. I still expect that to be tested. And if you just zoom in a little bit on the dollar index, this is a bear flag pattern, right? Oops, let me take the magnet off the charts really quick. That's a bear flag, right? That bear flag projects to, oops, I didn't mean to do that. I removed it. I meant to clone it. Here we go. Clone. And let's just say that was the peak, but we might go a little higher. Let's say roughly that projects us to 94.50 roughly. Okay. If we do not deliver a good jobs report on Friday, that may reinvigorate this downside in the dollar index going into the end of the week. So, for those of you guys that are around at the end of the week, and you are going to be around for the non-farm payrolls, and by the way, Canadian employment is also happening on Friday as well. The dollar index looks vulnerable still, and let's not disregard the fact that we've actually broken some pretty key trend lines in the dollar index. So the dollar, just to revisit the lower end of this bigger trading range, you're talking about 94 cents. That still looks like a larger, longer term consolidation. So I don't think that you're asking a whole lot for the dollar to drop down towards 94.50. And where that puts the euro dollar? That puts the euro dollar up here at 115 and change. 115, 115.50. And I know the market's not expecting the euro dollar to go any higher than where we're currently at, but look, we're above the 200-day moving average. We're consolidating. The euro dollar looks bullish. It doesn't matter, if you guys go, well, the Eurozone, why, I have a hard time buying the euro because of the Eurozone and what's happening there. Yeah, but it doesn't always have to be a euro story. This could be a dollar story as well. So keep in mind the dollar looks weak. The euro still looks bullish. Any gaps that we see over the weekend, they're probably going to get filled, within the first couple hours of the market being open on Sunday night. So the general trends that we've seen, especially in the currency market over the last couple of days, last couple of weeks, has been a weak dollar, and the euro dollar still looks poised to go higher. This pennant points to 115.50. You go back to the dollar index. The dollar index points to a move down to 94.50 roughly. Okay, now. One last currency pair I guess I should cover. Let's go over to the dollar Canadian. The dollar Canadian has been very weak, and we do have Canadian jobs report actually on Friday as well. But you look at the dollar Canadian, and we've come out of let me go over to the weekly chart really quick. We've come out of this nice channel, and with risk appetite stronger, generally speaking, especially with the standing down of China and the U.S., the Canadian dollar could continue to be a little stronger, which could put us towards 129 in the Canadian dollar. I mean, whoops, that's not the chart I want. Oops, I went too far. Here we go. 129 doesn't seem out of the picture at this point in time. 30 cents is obviously 130 is going to offer a lot of support just as a big figure number. But if risk appetite continues to stay strong, the dollar Canadian, or commodity currencies in general, the Canadian dollar, the Aussie, the Kiwi, those are probably going to continue to be relatively strong as well. So a move below 130, I don't think is unjustified in the currency market. One last thing I did want to mention, regarding regarding the G20 over the weekend. Some of the the mainstream, the mainstream media is painting the picture as as President Trump succumbing to China. Whether you agree with it or not, it doesn't matter. The reason why I'm pointing this out is that if President Trump feels that he's being viewed as weak and succumbing to China, okay, we have to watch his rhetoric the beginning of this next week, and that's important. I mean, if it's important for risk appetite, it's important for the currency market, because if going back to the S&P, for example, and we're talking about being at all-time highs. If President Trump fights back a little, or gives us some rhetoric on Monday or Tuesday that makes us believe that he's trying to fight back a little bit and not look so quote unquote weak, or as weak as the mainstream media paints him out to be, that could weigh on the S&P. It could weigh on it could continue to strengthen gold, and the dollar could reverse, because remember, the dollar is going to act better during periods of risk aversion. So that's just something that I think needed to be said, because it might be a risk at the beginning of this week as well, following this G20 meeting. So, again, I think you got to watch Twitter and watch Donald Trump on Twitter and see if he paints a different picture on Monday. Anyway, guys and gals, if you found this video helpful going into this next week, please hit the thumbs up on YouTube. It makes us feel better about putting together this free video for you, taking the time out of our weekends with our family to film these for you and edit and deliver it to you. So just give us a thumbs up. It makes us feel good. And if you didn't like it, I guess hit a thumbs down. But also subscribe to the channel. This way you don't miss any of our videos that we do post throughout the course of the week. And I want to thank you all for listening in. And for those of you that are in North America, especially in the US, have a great holiday week. And just remember, if you're using ForexAnalytix and you're ForexAnalytix customer and client, analysis will be sort of limited towards the end of the week due to the US holiday. You guys have a great one. My name is Blake Morrow with ForexAnalytix. I'll talk to you next week. Have a great one.